Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. We are back with a fresh week and we are on the last day of this month. And what a volatile month it has been, given that the tensions in the West Asia. But now that the ceasefire prevails between Iran and Israel and oil is also back below that $70 per barrel, much of the anxiety is definitely done away for the markets. And that was definitely visible last week also, because Nifty was up for the fourth straight session above that 25,600 mark. And whether this could be the fifth day of rally is something that we are hoping for and something that we'll be watching out for today too. But for today, GIFT Nifty trends are pointing out to a quiet start for our own markets. If you look at the pre-open rates also, pre-open rates are also quite subdued, a very flattish start for the markets that has been hinting in. But the global cues, that stand supportive. If you look at the US markets on the Friday, they ended on a good note. S&P 500, Nasdaq, both of them at record highs. And even equity futures rose despite Trump calling off the trade negotiations with Canada. Apart from that, Asia Pacific markets, that also started the day on a good note, with Japan's Nikkei 225 hitting the 6-month high. So all in all, good cues coming in for the domestic markets. We have big news on individual stock front too. Torrent Pharma announcing a large deal in the pharma sector. So we'll be touching base on that. And also some telecom stocks in focus after the May subscriber data that came in. Apart from these stocks, we'll also be taking your stock related queries. So keep dropping them on our live feed and we'll take them up shortly. Now, before we move further and deeper into the show, let's take a look at the top headlines this hour. US stock futures rise after Friday rally on Wall Street, with S&P 500 and Nasdaq notching record highs. Trade deals fuel hope for investors' risk appetite, and economic data help solidify rate cuts from the US Federal Reserve. Asian markets rise to start the week on a higher note. Japan's Nikkei 225 leads the gains as investors pass a slew of economic data. Meanwhile, the GIFT Nifty is indicating a quiet start for our own markets. Oil prices slip on easing geopolitical tensions in the West Asia, and prospects of another OPEC Plus output hike in July supported supply outlook. US President Donald Trump's Big Beautiful Bill clears key Senate hurdle. The sweeping tax cut and spending bill was passed by a 59-40 vote, but the question remains if it will pass House ahead of self-imposed July 4th deadline. Torrent Pharma is set to acquire KKR's 46.39% stake in JB Chemicals, followed by an open offer and merger, strengthening the chronic segment and CDMO footprint in India and abroad. Alright, if you look at the last trading session for the markets, it was again on a higher note, and Nifty did extend its winning streak to the fourth straight day. And Nifty is standing at the highest level since the October 1st close, which was last year. So at a 9-month high for the Nifty 50 coming in. And of course, market did log the gains for the second straight week, and Bank Nifty has notched another lifetime high in the last trading session above that 57,400 mark. If you look at the broader end of the markets, it was a broad-based buying emerging in. Mid-cap and small-cap indices also extended the run to the sixth day. And if you look at from the sectoral perspective, oil and gas, pharma, they emerged to be the top sectoral performers. On the other hand, on the losing end, we saw Realty and IT, FMCG, all of them were the sectoral laggards. This week, if you watch out for some of the cues, we will be having some macro data which will be pouring in for the Indian markets. Manufacturing PMI and services PMI data we'll be watching out for. Apart from that, the India-US trade deal is something that we'll watch out for, because the deadlock has been emerging, and July 9 is the deadline that we'll be watching out for. India has extended its stay in Washington given the deadlock in the deal, and it will aim to finalize before the higher tariffs kick in from next month onwards. But yes, good news that came in from the fund flows front also, where we saw the FIs bought the stocks in the last trading session. They bought the stocks which was worth about 1,300 crore rupees in the cash markets. On the other hand, DIIs, they were the net sellers, and they sold stocks which was worth about 588 crore rupees in the cash markets. Another positive cue, that is from the Nifty put call ratio, that continues to stay above that 1 odd levels from the previous session. However, a little bit fall that we can see from the previous session, but still above that 21 mark, which indicates that there could be some bullish sentiment which is intact in the markets. Now, just a couple of minutes to go before we go to the open, 3 to 4 minutes before we hit the open. At this point of time, as I mentioned, that the pre-open rates are pointing out to a subdued start for our own markets. But before we get deeper, let's quickly get on board with a technical expert of the show. Joining me is Rajesh Palviya of Axis Securities, which is joining in. Let's get on board with him. Good morning, Rajesh. We are finally back above that 25,600 mark, and the street is hoping it to reach the lifetime highs. How soon are you placing your bet?
Good morning, Lovisha. Yeah, looking at the momentum especially in last couple of days is clearly indicating that yes, there is a possibility that Nifty can scale up further higher towards 25,800, even 26,000 kind of level in the continuation of this up move, as very strong breakout of almost 5 to 6 week consolidation on Nifty. So that breakout is clearly indicating yes, there is a fresh buying interest has been emerged in the market, and the Lagarde sector also started participating in this up move. Bank Nifty is at all-time high trajectory. So looking at both the indices, we do believe that bullish momentum we may see in the coming days also, and possible upside towards 25,800 to 26,000 would be there for Nifty. So at this juncture, one should hold their long position. Trailing of stop loss would be the right strategy. Keep trailing stop loss towards 25,350 till these levels are intact. I think one should hold the long position. Even for the Bank Nifty also, very strong buying action has been taken place above 57,000 level. So I think for Bank Nifty, 57,000 should be kept as a stop loss to hold the position. We believe that this momentum can extend further. 57,600 to 57,800 would be the next target. Even mid-cap, small-cap space is also looking very attractive. So I think broader market is clearly giving a sign. Maybe this rally can extend further towards 26,000 level.
26,000 level, that's a good positive sentiment coming in. But yes, Rajesh, you were talking about the mid-cap and small-cap indices. They're up for the 6th straight day. Can we expect the bullish momentum to continue for the mid-cap and small-cap indices going ahead too?
So because as benchmark indices are above breakout level, so I think in this kind of market, mid cap, small cap or generally give the outperformance. And yes, we do believe mid cap and small cap both space can extend their gain. So I think here also one can get opportunity to buy good quality stocks, and I think one can get good return in the coming days.
Okay. Rajesh, what about the IT stocks? Because we did see that they slipped for the second consecutive day. One of the top laggards last week also. We did see that the Accenture's weak deal wins disappointed the street. But going ahead, how do you place on the Nifty IT sector? Because everyone was eyeing out for the cheap valuations from the sector.
So I think for Nifty IT index, 38,500, 600 zone is very important, and till these levels are intact, there is a hope that we may see again pullback from those levels, because it's a 50% retracement of entire fall of IT index. So I think in this decline, 38,500, 600 can be watched closely. If it's good quality stocks, especially mid cap IT space is looking more promising from compared to the large cap IT. So wait for another dip of 100 200 point in the Nifty IT index, and then I think again one can look to buy stocks from those sectors.
Okay, all right. Let's address the open at this point of time, because we are seeing a very subdued start for the markets. Nifty flat at this point of time, but still holding above that 25,600 mark. Sensex also down about 61 points, but it's still above that 83,970 levels. That is where we are standing at this point of time. If you look at the breadth of the market, still in the positive at this point of time, because 7056 shares have been advancing and 688 shares have declined at this point of time. In the early trade of the session. If you look at some of the sectoral indices, India Wix, that is very flat in the trade at this point of time. If you look at Realty index is doing well, 0.2% gains coming in. Small cap and mid cap indices, like we were talking about, both of them have been extending gains to the seventh straight session at this point of time. If you look at some of the other sectoral indices, IT index after last week's subdued performance that we saw, IT index is not very flat in the trade at this point of time, because it is eking about flat in the green at this point of time. If you look at some of the other sectoral indices, if you look at metals with about 0.1% gains, oil and gas with about 0.3% gains coming in, and of course the telecom index after the May subscriber data with about 0.3% cut at this point of time. So yes, all in all, we can see it's a very subdued and a very quiet start for the markets, but given that we had a good global Q that supported the markets, we could see some improvement in the intraday trading day of the session. But let's take one stock in focus, that is your Mazagon Dock. The stock has been doing well in today's session. We did see that the board approved the acquisition of a controlling stake in Colombo Dockyard PLC, which is a Sri Lankan listed shipbuilding firm, and the transaction was valued for about 452 crore rupees. We did see that a stellar rally last month for Mazagon Dock. Rajesh, but the stock has entered into a consolidation zone. What can we watch out for Mazagon Dock going ahead?
So I think stock is holding above 50-day moving average. I think this is the positive sign for the near term to short term trend point of view. I think 3150, 3120 is the important level for Mazagon Dock, as we have witnessed some bit of profit taking at higher level, but still looking at the near term structure, we believe that till stock is holding above 3150, trend is likely to exhibit on the bullish side, and on the higher side, once stock manages to cross above 3660, 3260, 3280 kind of zone, I think again fresh buying may emerge in this counter, and then possible rally can extend towards 3450, even 3500 level. So buy on dips would be the strategy, buy and accumulate would be the strategy, as overall structure is looking bullish. Stock is moving in upsloping channel on the weekly charts, so it's a sign of sustained buying action is taking place in this counter. So accumulate if you get any opportunity in volatility.
Okay, accumulated any opportunity. Let's take another stock in focus, that is your Torrent Pharma, because that has announced that it will be acquiring JB Chemicals from KKR in two phases at an equity valuation of about 25,000 crore rupees. Now, the transaction is expected to be executed in two phases. The first phase will see that Torrent will acquire with about a 46% stake, and it may also acquire up to 3% stake from certain employees of JB Chemicals, which is at a price of about 1600 rupees per share. And then an open offer could be on the horizon, which for an additional 26% stake for JB Chemicals. If you look at the stock reaction, Torrent Pharma still in the green, but JB Chemicals, sliding with about 6% cut. Definitely, market is pricing in at the discount of this transaction value to the market cap, and that's why we can see that a slide in JB Chemicals stock at this point of time also. Rajesh, for both of these counters, what does it mean? How does the chart look like for the near term?
So I think Torrent Pharma now, looking at the near-term, short-term structure, it's almost negotiating with its previous swing high, which is at around 3350, 3360 zone. If at all stock crosses about 3360 level on a closing basis, yes, there could be a breakout on the near-term as well as on the short-term chart, and then we may see furthermore extension of this pullback towards 3450, even 3500 kind of zone. So stock is almost on a verge of giving breakout to its supply zone. So it's interesting to watch above 3360 for Torrent Pharma. But for JB Chemical, there is a gap down opening based on this news flow. Stock is now slipped below to 200-day moving average. Looking at the near-term structure, I think 1650 is the key level to watch for in this gap down. If it's able to sustain above 1650 level, then some pullback action would be there in this counter. If it breaks below 1650, maybe furthermore supply towards 1620, even 1600 level can be seen in the near term perspective.
Okay, that is a view for JB Chemicals also. Let's take some of the viewer queries that is popping on our screen at this point of time. The first query coming in from Naveen, he's asking the view on BHEL. BHEL, if we look at the stock from a 1 month perspective, the stock hasn't really moved anywhere, but today the stock is doing quite well given that we have a new order win from Adani Power to supply important equipment parts for the company. BHEL, what is your view on the counter, Rajesh?
So we are holding bullish view for BHEL. The way stock managed to give breakout on the weekly chart of last 3 week downfall, it has been there is a breakout of falling trend line. And looking at the structure, I think if it continues to hold about 263, 264 level, there is a possibility of 275 to 280 kind of zone for BHEL. So I think one can hold the position with stop loss of 263 for BHEL.
Okay, 263 stop loss for BHEL that is coming in. Let's take another viewer query at this point of time. Sita Ramalu is asking the view on L&T Foods. L&T Foods, very sharp rally we have seen from April onwards, and even after June low, that the stock has been seeing a good breakout with about 20% uptick. What is your view on the counter for L&T Foods, Rajesh?
So LT Food is looking promising. The way stock after correction, the way stock has recovered, almost it has recovered whatever fall which we have seen in last couple of days. Now stock is negotiating with its previous swing high, which is placed at almost at 485, 486 zone. Any move above 486 can take this stock further higher to 520, 530 zone also. So I think one can hold the position. Looking at the recovery in last couple of days, it shows that there is a possibility of 520, 530 target. So at this juncture, we will advise to keep stop loss of 472 to hold the position.
Okay, hold the position for the counter. Let's take another look at the stock viewer query. Satya is asking the view on Inox Wind. He still holds the stock at the price of 188 rupees, and he's asking what is the next target to exit the counter. 188, and he's seeing a little bit of a loss at this point of time. 176 the stock is trading at. From June onwards also the stock has been exhibiting quite a negative trend. Anything that you're watching out for the counter, Rajesh? The target levels that you want to advise?
So it's an underperforming stock. Some recovery has been taken place from the level of 165, but again now stock is negotiating with its 20-day, 50 days up, resistance area, which is placed at around 176, 177, 178 zone. So if it's able to sustain above 178, can take this stock further higher to 180, 85 kind of zone. But still the major supply zone is placed at 188 only, where he has bought. So 188 is the key resistance area for this pullback action. But again, for near-term trend, 177 needs to cross. Then only we can expect a 185 to 188 target. But at this juncture, I think one needs to watch this price action closely. If it's failed to cross 177, 78 zone, I think again some profit taking or some supply pressure would be there in this counter, and again it may come down to the level of 170. That's the next down move if it comes.
Okay, all right. That is the view coming in for Inox Wind. Let's take another viewer query at this point of time. Debu K is asking the view on Godfrey Phillips, and he is asking if there is more upside left for the counter going ahead. A multi-bagger stock in a 1 year, from a 1 year perspective, Rajesh, anything that you view on the counter?
Yeah, so very strong momentum we have witnessed in this counter, and looking at the overall structure, stock is bullish across all time frame, now almost trading near to its all-time high trajectory. We believe that till stock is holding above 9,000, 9,050 kind of zone, there is a possibility that maybe after a brief consolidation we could see another leg of rally towards a 9,500, 9,600 zone for this stock. So overall structure is bullish. Those who are already bought at lower level can trail stop loss towards 9,050 to hold the position for further more upside in the near term to short term perspective.
Okay, all right. More upside could be there for the counter going ahead also. So that is something that we'll watch out for as well. Let's take another viewer query. Pankaj is asking the view on SBI. All the PSU bank stocks are in focus today also, given that the finance ministry has, urged all the lenders to move in with their credit mobilization going ahead also. But SBI, anything on the view on the counter for you, Rajesh, given that we also exceeded the RBI's rate cut which came in for the overall sector?
So SBI is also, recovering, and now it's in consolidation. Looking at the near-term, short-term structure, 825 is the key supply zone for the stock. But looking at the overall structure, we believe that, there is a possibility that, stock may attempt to give breakout over 825. And once this breakout succeeded, I think then rally can extend towards 860, 870 zone also for SBI. So those who are looking for, some investment opportunity for a little positional kind of, investment. So I think SBI is the right stock to buy and accumulate. Keep your stop loss towards 780 zone. And I think there is a possibility that, stock may attempt to give breakout over 825, and then we may see target towards 860, 870.
Okay, 860 and 870. That is what we'll watch out for SBI also. Let's take another viewer query. Kat is asking the view on Vodafone Idea. Vodafone Idea on the charts, how does the stock look like on the counter, Rajesh? Because we did see for the May subscriber data, the counter once again, they have lost the subscriber base. And of course, there's a lot of talks which is going on in the street with regards to its sustainability going ahead as well. What do you view?
So some recovery is taking place in this counter. I think 8 rupees 50 paisa is the key supply zone for the stock in this recovery. On the downside, 7 rupees is the key support area. So I think stock may remain in this range. Only either side breakout or breakdown will decide the major direction for the stock. But looking at the recovery in the near term, I think stock may attempt to move higher towards 775, 8 kind of level. So 8 rupees is the key resistance area for this pullback. Again, one should review the position around those level.
Okay, all right. Let's take another viewer query at this point of time. Satish Guntur is asking the view on Tejas Networks. He's bought the stock at 780 rupees per share. He's asking what is the sell scenario of this counter and what is the target that he should watch out for. 700 rupees, that is where the stock is trading at. So he's seeing a little bit of a loss at this point of time, and the stock has been fairly range bound, Rajesh. If you look at from the couple of sessions, 700 to 690 rupees, that is where the stock has been trading at. Anything that you're watching out for the counter going ahead?
So after correction, stock is still consolidation in the consolidation only. Breakout is still awaited. The breakout level is placed at around 800 level. So until the stock not crosses above 800, we may see further more consolidation in this counter. On the downside, 670 is the crucial level to watch for on the downside. If it breaks below 670, I think we may see further more cut in this counter, and then possible down move can extend towards 650, 620 also. So 670 should be keep as a stop loss. On the higher side, 760, 800 would be the key resistance area for the stock for any up move if we witness in the near term.
Okay, 760 is the resistance area that we need to watch out for the counter. Let's take another viewer query then. Manish Verma, he's asking that, he's been sitting with TCS for the past 3 years and there is negligible returns for the counter. He's asking whether he should remain invested or get out of the counter. We are seeing plenty of headwinds coming in for the IT sector also, but a big heavyweight like TCS spells a lot of trouble for the sector going ahead. Rajesh, what do you view on the counter for TCS going ahead?
So it is in consolidation only, and stock is forming a contracting triangle on a weekly chart, but breakout is still not happened. For breakout, stock needs to cross 3500, 3520 level. On the downside, the major support area is placed at 3400. Looking at the consolidation, we believe that there is a possibility that stock may attempt to give breakout on the higher side, as most of the IT stocks are witnessing the same kind of behavior. But keep stop loss of 3400 if you are holding the position. Above 3520, yes, there is a possibility of 3600 to 3650 target, but it may take time as consolidation is still going on the weekly chart.
Okay, all right. Let's take another viewer query then. The query is coming in from Anune. He's asking the view on RK Forgings. He's bought the stock at the price of 641 rupees and he's asking whether he should hold or exit the counter. RK Forgings trading at about 674. Past 1 month, we can see, the stock has delivered decent returns with about 11% uptick, but fairly the stock has been in a very, range bound territory. Going ahead, anything that we need to watch out on the levels front, Rajesh, for RK Forgings?
So I think looking at the near-term, short-term structure, there is a sign of recovery to continue further in this counter, and once the stock crosses above 690 zone, there is a possibility of upside target of 730, 740 for near-term to short-term perspective. But yes, the position can be hold as recovery sign of recovery is there, and sign of reversal also after the correction on the monthly chart. So I think 730, 740 would be the near term target, but I think if it's crosses above 740, possible up move can extend towards 800 also. So at this juncture, our advice would be to hold the position, keep stop loss towards 655 for positional target of 740.
Okay, 740 is what we need to watch out for RK Forgings. Let's take another viewer query. Nitin Shahji is asking for Himadri Specialty Chemicals. What is the view on the counter? We did see a good breakout in the last couple of sessions, Rajesh. But from the levels front, can we expect the upside to continue going ahead? And what is the next level that we need to watch out for?
So I think yes, there is a strong buying action in this counter, and looking at the near-term, short-term structure, this rally may extend further. 560, 570 would be the next target. Keep stop loss towards 505 to hold the position.
Okay, all right. Let's take another viewer query. Well, Pankaj Mitra is asking what is the view on Nestle before the bonus execution on the counter. Well, we did see that the Nestle has announced a first ever bonus issue, which is in the ratio of 1:1, and the record date is expected to be announced within 2 months also. But for the Nestle as a counter, and of course from the overall FMCG basket, what is your view, Rajesh?
I think most of the FMCG stocks are still in the consolidation range, and but looking at the near-term, short-term structure, I think there is a possibility that this sector may give breakout going forward. For Nestle, stock is now trading near to its multiple supply zone, which is placed at around 2470 zone. Once a stock comfortably trades above 2470 and start giving close above this level, we may see a rally towards 2550, 2600 for the Nestle. Again, if we look at other FMCG stock like Marico or Dabur, most of the stocks are still struggling to cross their previous swing high. Marico is also looking promising, but 740 is the challenging level. Once stock crosses above 740, here also we may see a good rally towards 780, 790 zone also.
Okay, all right. That is the view coming in for Nestle then. Let's take another viewer query. Alex is asking the view on MTR Technologies and what is the support levels. He's asking out for that specifically because now we can see that after a big pickup in the stock in the months of May or June, the stock has once again entered a consolidation zone. Rajesh, any support levels that he needs to watch out for?
So almost stock is trading near to its 50-day support area only. 1570 is the immediate support area for the stock. If stocks hold this level, I think some pullback would come. But if it's failed to hold 1570, then next support would come at around 1530 zone. So that these two support level needs to closely watch. Let's see where the stocks gets again buying interest, whether it's a 1570 or 1530 zone. But overall structure looks to be in the consolidation only. The major supply zone on the higher side is placed at around 1730. So until the stock not crosses above 1730, I think we may see further more consolidation for next couple of weeks for this stock. Sideways behavior is likely to be there for this counter.
Okay, sideways behavior likely for MTR Technologies. But just one last question before we let you go, Rajesh. We're seeing a good run up for the past 4 sessions. Today we're seeing a little bit of a cool off. But however, what is your buying areas at this point of time? Anything that you're liking from the markets?
So Laurus Lab is looking very promising. The way stock is now moved back to the all-time high trajectory, this stock has potential to continue furthermore upside. 750, 760 would be the positional target. Keep stop loss towards 690. Another stock where we focusing, that is LIC, Life Insurance Corporation. Insurance sector is showing a sign of accumulation. So LIC is looking promising. 992,000 would be the next target for the counter. Buy and accumulate would be the strategy. Keep stop loss towards 930 to buy and accumulate LIC also. And from banking space, I think Bandhan Bank can be looked at. The way stock is continuously making higher high low formation on weekly chart. There is sustained buying action is taking place in this counter. Possible up move towards 205 would be there. So buy and accumulate would be the strategy. Keep stop loss towards 183 for Bandhan Bank. So these three stocks where we are focusing at this juncture.
Okay, all right. These three stocks that we need to watch out for also. But with that, we have to let you go, Rajesh. Thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets at this point of time. Sensex down about 163 points. And Nifty is also down with about 25,600 levels, but however still holding above those levels at this point of time. If you look at from a sectoral perspective, however, Nifty IT index, which was doing well in the early trade, it is down about 0.1% at this point of time. Nifty IT index definitely not doing well at this point of time. If you look at some of these other sectoral indices, Nifty Bank index, it's fizzled out some of the gains, given that in the last session we did see that it had clinched a record high levels. Some of the other sectoral indices, if you look at, let's take a look at how Nifty Realty is doing at this point of time. Nifty Realty with about 0.4% cut that is coming in. Nifty FMCG also seeing a slight bit of a cut at this point of time. Nifty PSU banks, however, that is holding well quite in the markets. 1.4% uptick that is coming in for the Nifty PSU bank. We did see that the finance minister has urged majority of the lenders to amp up their credit mobilization as well as deposit mobilization going ahead at this point of time. Nifty private banks, however, private banks are taking a little bit of a backseat, and metal stocks are also seeing a little bit of a cool off with about 0.1% downtick. Nifty Pharma index, if you look at 0.2% uptick coming in, given that we are seeing a large trade deal that is taking place with Torrent Pharma and JB Chemicals in that particular space. So we can see some sentimental reaction, which is well playing out in those segments too. Coming in from the broader end of the markets, if you look at the broader end of the markets, the mid-cap and small-cap indices, both of them are seeing a little bit of a subdued trade. However, they are outperforming the benchmark indices. Mid-caps with about 0.1% gains, and small caps also with about nearly 0.8% gains. So yes, small caps at this point of time, they are the ones which are the star performers at this particular trade point of time. But yes, Torrent Pharma, one of the bigger pharma index, trying to play out those sentimental reaction, we can see that that stock is also not doing quite well. Torrent Pharma is doing well, but however, if you look at JB Chemicals, that stock is seeing a bit of a slide with about a 6% downtick. That is what we are watching out for. So yes, those stocks that we need to go for. But with that, let's quickly get on board with the next guest of the show. We have Feroze Azeez, Deputy CEO. Okay, there is some technical snag which is going on, but like I was mentioning that about Torrent Pharma and the deal that has been announced about the controlling stake in JB Chemicals. We have some brokerage reactions which is coming in for the Torrent Pharma stock, where we are seeing that Nomura has shared a neutral call on the counter, and they have shared a target price of about 35.80 rupees for Torrent Pharma, and they've called the investors are likely to take a comfort that the company has been successful in the past acquisitions. So they are quite positive on this particular acquisition also, and they believe that the course acquisition template in India is quite well established. They believe that the company will gain from the cost synergies in the near term and the potential revenue synergies in the long run also. And in the case of JB Chemicals and Pharma, the India product portfolio is complementary to that of the company. So from the domestic side of the business, that is also, supposedly set to gain a lot. And both the companies, since they have a large presence in the cardiac and the gastro segments, that product portfolio also is bound to see a good boost going ahead. However, the deal size is much larger than what the company has executed in the past, so some risk could be expected from that particular point of time. On the other hand, if you look at RBL Bank, how that particular stock is doing, because we did have Citi coming out with a buy call on the counter. Let's take a look at how RBL Bank is doing at this point of time. It has given out a buy on the counter, and the stock is also doing well with about a point, nearly a percent gains or so. What Citi is saying that they expect the return on asset trajectory to improve from here on to about 45 to 50 basis points, and that will be much awaited by the normalization of the credit cost. And they expect the slippages to moderate from here on, and however, they also expect the NIMs to bottom out in Q1 versus the peers. On the other hand, they've also said that they have opened a 90-day positive catalyst watch, which is also coming in as a good thing for the stock for the counter also. Now, let's take on another brokerage report that is coming in for the city gas companies by the city as well. They have mentioned that the two key regulatory catalysts could be around in the corner for the gas sector, where they believe that the GAIL's final tariff order is also expected shortly. And given that we have seen, quite a volatility in majority of the gas stocks, this could be a key positive which is coming in for the gas stocks, because they have opened a 90-day positive catalyst watch on IGL, and they believe that Gujarat Gas and MGL could be negatively impacted. However, GAIL is the obvious beneficiary, and IGL and JSPL could be the key beneficiaries going ahead also. But let's quickly check on the next guest of the show. We have Feroze Azeez, Deputy CEO, Anand Rathi Wealth, joining us. Okay, all right. There's still a little bit of snag, but let's take a check of the markets at this point of time, how the markets are doing. Well, if we look at from the early days, Sensex is still down about 172 points, and Nifty is also holding above that 25,600 mark. Let's take a look at some of the top gainers and losers on the Nifty 50. Top gainers continue to be Jio Financial with about 1.08% uptick. Trent was seeing a good gains with about 0.8% gains. TCS doing well, given that we were discussing in the previous segment about how the IT stocks have taken a backseat given Accenture's softer deal bookings. So yes, today we are seeing a little bit of a respite, and TCS with a good set of gains, about flat in the trade at this point of time. Other than that, Tata Motors, Asian Paints, all of them doing well on the Nifty 50 gainers list. On the other hand, what is not doing well, that includes the likes of NTPC with about 1% cut. On the other hand, we can see Dr. Reddy's Lab with about 0.8% cut, and SBI Life with about 0.5% cut, and Axis Bank also seeing a cut of about 0.5%. Other than that, we can see Hindalco, Titan, all of them seeing a cut of about 0.4 to about 0.2%. But yes, if you look at from the broader end of the markets, they have been outperforming the benchmark indices, and that has been doing quite well. And since since Nifty is also above that 25,600 mark, it's just 2.5% away from its lifetime highs. So yes, that is something that everyone is watching out for, and that is something that we will be also looking for this series as well. But with that, let's move on to our next guest of the show. Hopefully, we have Feroze Azeez, Deputy CEO of Anand Rathi Wealth, joining us. Good morning, Feroze. I hope I'm audible right now. Feroze, Nifty is just 2.5% away from its lifetime highs. How soon do you believe can we mount again on that mark?
Oh, Lovisha, I think that's not too far away. That's what I guess. But I think for the barometers I track from a derivative treasury standpoint, I know where the market will not go down. On 4th June on your channel, had said that markets will not go below 21,000 when the counting was happening, and at 10:11, where it was more or less unclear who the majority would be. Will it be NDA or BJP? So, point I'm trying to get to is for an investor or a trader, what is important is what kind of falls are possible. So now, if I paraphrase the question a little differently, I personally think there is not going to be more than 3-4%, 5% downside, which can sustain in the market. That's what I think is the most important question for an investor. Of course, a trader would want to know when will it re-establish the 26,272 mark, which it did on 27th September 2024. So coming back to the point, I think the barometers are stacked very well. So there are four things which decide where the market would go in the short term, in my opinion. One is the liquidity. Liquidity is if I branch the liquidity into 3-4 segments. One is categorization in terms of cash market and derivative market. The other categorization is domestic institutions, foreign institutions, and others. If you look at the cash market, I think FIIs have turned positive cash market. They've already sold 4-5 lakh crores. Their total net flow after FY21 is zero. Okay, we look at it daily, we look at it monthly, but if you look at it cumulatively after FY21, which was COVID period, whatever they brought in has been taken out. So cash market, there is very little selling possible from FII. From a domestic institution, again, this total will mesmerize you like it did to me. Last 4 quarter years, DIIs have brought in 15 lakh crores. 15 lakh crores. The previous 8 years, they brought in 2 lakh crores. So GIIs, after bringing 15 lakh crores, have 3 more lakh crores in the pocket. So cash market selling is near impossibility unless there is a catastrophic situation on the global side, and I can speak to you about it. Derivative, I think FIIs are very light. We are at 22%, 22% the long positions, which is a very light position. If you look at margin funding books of brokers, those are light as well. Those are not at peak levels. So I would say there's several more, so let me not bore you with those. I would say markets correcting is very unlikely. That implies that if there's little good news, short covering should get us to the peaks.
Okay. But, now that the earnings season is upon us, what are you expecting from India Inc. in growth terms also? Because, if we look at from after COVID onwards till FY24, we saw a good run rate. But FY25 was something that we saw with about very mid to single digits growth. How do you expect FY26 to pan out for the markets? Are you expecting a mean reversion from what we saw in the previous financial years, or how do you expect it to pan out?
Lovisha, in my opinion, of course, like you rightly said, Nifty grew about 9% and ended at 1,096. Most people don't know the absolute value of Nifty's earnings, which is what I think is very, very critical. 1,096 is where it ended. We had last projected about 1,120, so fell short about 24 rupees, which I think is okay for a bad year. If you look at midcap earnings, which I think, again, people, the narrative is not as positive as the number is. 16.6% is the growth of Nifty midcap 150. Why would I say this is the most important index? Because SEBI has mandated this as the tier 1 benchmark for most mutual funds, and that's where the money is coming from. So if anybody thinks that they can see any other mid-cap index and be happy about it, they're wrong, they're mistaken. They should look at Nifty mid-cap 150 alone, because that's what the domestic institutions are mandated to take as tier 1. And that grew its earnings by 16.6% and ended at 579 on a base of 486. Small caps, again, Lovisha, I'm just reading out the numbers because most of the street doesn't know these numbers. If you look at the Nifty small cap 250, which is again the most important benchmark, not for a mutual fund investor, for any Indian capital market investor, because that's where the money is. Mutual funds are what is pumping in the money. So that has grown by only about 7%, and 543 was the earnings closure. So coming back to where we see this happening, where we see this growing for the full year, I personally think you will see about 13 to 15% growth in the small cap. Again, a 17-18% growth in the mid cap constant ones. And I think Nifty will grow about 13% on a base of 1,096 is what the earnings estimates are. And I think where we are today, in January, I was negative in small and mid cap. But I think now we are back at the equilibrium position. That's what I've been telling the media for the last 15 days. And that's where you see some degree of outperformance of the broader market.
Okay, okay. Feroze, now that you spoke about earnings also, I want to understand from the next catalyst for the markets, because everybody is waiting for the July 9th deadline, and we can see the deadlock which is persisting between India and US in terms of trade deals. But what are you expecting from that particular perspective? And of course, how would you position your portfolio against all of this backdrop?
Lovisha, in my opinion, that trade deal, of course, will have a medium-term impact for different sectors. But how I am seeing the trade deal is, I would not jump the gun. And I personally think we are currently driven by domestic liquidity. I think from the global market, I'm not looking at the trade deal at all. I'm looking at credit default swaps of US Treasury touching 92 and back to 42. And if somebody is not looking at this, and this is the biggest global spill out which Indian markets could have. The second global variable which everybody needs to look at, in my opinion, humble opinion, is the Fed's balance sheet. How will Fed reduce its balance sheet? QE is not possible. Gone are those days where liquidity could be pumped in because inflation was not an issue last time around. US is facing an inflation issue today. So QE is not something which is an option. So QT, which is tapering, could happen. How will they do the tapering? They have about 6.5 years of average duration in their balance sheet. If they just hold that and don't renew that balance sheet, if they do it hold to maturity, in 6 years, their balance sheet size sinks to half. If this is the path they take, it's a safe thing for the globe. If they would actually do tapering, that will be actually a disaster for most of the global markets.
Okay, okay. How would you place IT sector, you know, given its exposure to the US? And we did see in the Accenture's earnings that the recent weak deal bookings have disappointed the street. So how do you expect IT sector with respect to this? And given that the street was also viewing the valuations to be quite inexpensive in this current market?
When I look at IT, I would first look at IT from a Nifty IT index perspective. That's got about 10 stocks. It has a free float, which is only 46%, which I think is an advantage for IT stocks. Lower free float, okay results can create some degree of pullbacks, even in adverse situations for the sector. This hypothesis, which I'm just stating, is a powerful hypothesis if someone were to test it. Now, coming back to what we see in IT, I personally think, again, IT has delivered about 10.7% results. Nifty IT index had an earnings of 1,332.1, which implies that there was a 10% growth in earnings, which was the third best sector in Nifty. It represents about 11.8% in Nifty. It represents 8.3% in NSE 500. Any sector which has a larger weightage in Nifty and a smaller weightage in NSE 500, again, a separate hypothesis, is going to have some degree of liquidity pressures in a bad cycle. Because weightages can come down in Nifty, and that results in a lot of index fund selling, because 10 lakh crores is what is there in Sensex and Nifty almost by the end of this year. So coming back to Nifty IT, I personally think if it's a 3-year call, I'm not too worried about how IT is placed, because agility is there in that sector. They are able to move their business models around. We are services, not a products IT company. Like US is absolute product IT. And India is pure service IT, supporting those product businesses. So I'm not too worried because from a long-term perspective, so Nifty IT, if you mark my words, in 3 years can beat Nifty by about 3 to 4% per annum.
Okay, okay. Anything else that you're liking in this market at this point of time, Feroze, and anything that you're remaining on the sidelines for the time being?
See, I would remain sidelined on auto. That has delivered a minus 2.6% growth. That's one business which will go through, it's gone through a lot of sheltering in terms of import duties. Large cars, UK cars have a 180% duty and stuff. So I think that's been a protected sector. I don't know why so, but that's the reason why I would structurally not be very comfortable unless things unfold. Coming to Nifty capital markets, which I think is the most underrated sector. If the whole financialization of India has to take place, Nifty capital markets, which has about 15 stocks, 14 stocks, let me give you a disclaimer that we are also a part as a listed company in that sector with about 3% weight. But that's got one sector which has zero weightage in Nifty, has about close to about 1.8% in Nifty NSE 500. India is gone through a paradigm shift in mindset. Indian lower strata is not seeing mutual funds as saving. It's not seeing it as an investment vehicle at all, and it is now seeing it as a savings vehicle. If somebody could catch this trend, he will understand that a person who's putting 1,000 rupee SIP has stopped checking its value. Earlier, he would check his value, stop his SIP. Now he's seeing it as a chit fund where he was contributing 200 rupees every evening. So that change will result in a huge influx. Another 10 years, you will see almost 45 to 50 lakh crores coming in from domestic institutions. Like last 4 years have given 15 lakh crores. And that having zero representation in Nifty 50 can't be the case 5 years from now. So Nifty Capital Markets, which was a 39% growth in earnings, could be one sector which one should watch out for if you really believe in India. Having a 0% weight of Nifty capital market stocks in Nifty is not making sense to me.
All right, capital market stocks that we need to watch out for, and we've seen a good run up in all of those counters given the broad-based breadth of the market has improved. All right, with that we have to let you go, Feroze, but thank you so much for your time and joining us. All right, let's take a quick check of the markets at this point of time. We are still in the negative territory, but Nifty is still holding above. Nifty has slipped below that 25,600 mark at this point of time with about 0.2% cut, and Sensex also seeing a cut of about 0.3%, down about 270 points at this point of time. If you look at some of the sectoral indices, Nifty Auto Index not doing well with about 0.3% cut. Nifty IT Index also not doing well with about 4.4% cut, and Nifty PSU banks, however, soaring the trade with about 1% uptick that is coming in from the PSU banks perspective, and the mid-cap and small-cap indices that continue to be in the positive territory, outperforming the headline indices at this point of time. But with that, we've come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing. We will be discussing about how the market is developed with a new market guest at this point of time. Until then, signing off, do stay tuned to moneycontrol.com for all the news updates and market insights.